Welcome to the Deep Dive. We cut through the noise to bring you the core insights on topics that, genuinely shape our world. Today, we're diving headfirst into a field that touches everyone, really, whether you realize it or not. The constantly evolving ethics of accounting, especially in our digital age. Our mission today is to unpack how these rapidly advancing technologies, from sophisticated AI to the decentralized world of cryptocurrencies, aren't just changing how accountants work. They're fundamentally challenging their ethical compass. Just imagine, say, an accountant at a cutting-edge tech firm. They discover the AI algorithm used for client tax calculations, while super efficient subtly disadvantages small businesses. Now, that's not just a tech glitch. It's a profound ethical dilemma, right? It could impact thousands. So we're going to extract the most important insights to help you understand these profound ethical considerations and, frankly, why your trust in our whole digital economy kind of hinges on their compass.
That's exactly right. And these ethical dilemmas, they're inherently complex. They often involve many perspectives, difficult choices, especially when traditional principles are really being tested, sometimes pushed right to their limits by entirely new technological scenarios. It's a fascinating space, really, where old rules meet these new realities.
Okay, so let's start by maybe challenging a common perception. Accountants aren't just number crunchers anymore, are they? Why is it that, more than ever, they're becoming these key players in the moral and ethical culture of organizations?
Well, it's because their actions directly contribute to an organization's ethical environment. That's especially true now with the rapid adoption of all these new digital tools. And ethical dilemmas are tricky. It's not just because they involve different perspectives, but often they touch on really sensitive issues like wealth distribution or even, personal relationships sometimes. Recognizing and dealing with these dilemmas is actually a core part of being a professional accountant now. It's much more nuanced than just balancing ledgers. It's really about shaping trust.
Right. And as accountants gain more digital power, these new vulnerabilities emerge. It makes you wonder, are the traditional ethical guardrails even strong enough for these entirely new landscapes? Let's talk about the specific threats that can get amplified. The sources we looked at highlight 5 classic threats to ethical behavior, but the digital age puts a really unique spin on each one. First, there's the self-interest threat. That's where a financial or other interest improperly influences judgment.
Mm-hmm.
Then the familiarity threat, being too sympathetic because of close relationships.
Yeah.
The intimidation threat, being deterred from objectivity by pressure.
Okay.
The self-review threat, not appropriately evaluating past judgments for a current service.
Right.
And finally, the advocacy threat, promoting a client's position so much that objectivity gets compromised. How does the digital age kind of twist these?
You've really pinpointed the core challenge there. I mean, think about the self-interest threat. It's not just about a hidden bonus anymore, right? Imagine an accountant tempted to, say, train an AI to subtly downplay certain risks, maybe to make a digital investment portfolio look better, which directly benefits their own stock options.
Ah, I see.
The digital veil can make these ethically murky decisions much harder to trace.
Right.
And for the familiarity threat, automated systems might generate flags, sure, but a close relationship with a client or colleague could lead an accountant to just ignore those digital warnings.
Okay.
Intimidation doesn't just come from a boss anymore. It could be a hacker threatening to expose data unless you manipulate digital records. And that ties directly into the cybersecurity threats we'll definitely get into. The self-review threat takes on new meaning when accountants are auditing AI models they actually helped implement.
So interesting.
And with the advocacy threat, promoting a client's position might mean, hyping up the value of their questionable crypto asset, even if the underlying tech has serious flaws. Accountants really need to be hyper aware of these amplified threats to navigate these new digital scenarios. Ethical behavior isn't just some compliance checkbox. It directly helps build trust with stakeholders. And that's crucial for any organization's long-term success.
So, okay, that's the theory laid out. What does this all mean for the contemporary accountant who's actually facing these technologies reshaping our world? Let's maybe dive into some concrete digital scenarios.
Yeah.
How about starting with cybersecurity? We hear about breaches all the time, but what's the accountant's specific ethical stake here?
Well, the most immediate impact, obviously, of a cybersecurity breach is data theft. That directly leads to financial loss and pretty significant reputation damage. And while IT security might seem like purely a technology issue, the accountant is often a custodian of really sensitive data. Whether it's employee data, customer data, financial data, they need to be acutely aware of these risks. They're kind of like the digital vault keepers.
That's clear, but maybe beyond the obvious financial hit, How does a data breach, looking specifically through an ethical lens, compromise an accountant's credibility? Is it just about compliance, or is there something deeper about the trust they hold?
Oh, it's absolutely deeper. Think about intimidation from hackers, right? With their threats that data will be misused or destroyed, that can really compromise an accountant's objectivity.
Right.
And a data breach itself is a direct violation of that ethical duty of confidentiality, which applies to both customer and employee data, by the way. Accountants have a really clear responsibility here. They need to know where valuable information resides, ensure controls are actually in place to secure it, and understand all the relevant regulations. If customer data gets misused, an accountant could even be accused of failing to act with integrity, competence, and due care, because they're expected to foresee and mitigate these risks.
Yeah, it makes you think about an accountant's obligation to the public interest, too. That might even require public disclosure, like telling customers their data's been exposed.
Yeah.
That's a huge ethical weight, isn't it? Potentially impacting their own organization's reputation just to protect the public.
It truly is. It's a massive responsibility. Now, maybe let's look at platform-based business models. These businesses, like Airbnb or Uber, they fundamentally create value by connecting consumers and producers. They often operate with minimal physical assets, or they don't need a direct increase in traditional employee numbers to expand significantly. They just build a user base and connect them to this network of trusted specialist suppliers.
But if we connect this to the bigger picture, these businesses don't just connect, they sort of curate, right? Often setting terms for individuals who, while not technically employees, on paper, are deeply reliant on the platform for their livelihood. This model creates these novel ethical quandaries. So how does an accountant ensure fairness and address governance issues when the very definition of labor seems to be getting reshaped?
That's precisely the ethical dilemma. The accountant might need to evaluate if these suppliers are being treated unfairly, specifically regarding whether they should really be considered employees with all the associated rights versus simply independent suppliers. It requires a delicate balance between the commercial interests of the business and the fair treatment of both suppliers and customers. Preventing unfair treatment of stakeholders is a really key concern for the accountant here. It's a tricky balance, definitely. Sometimes it feels like, a modern Wild West. I actually recall a situation where an accountant had to dig really deep into contract terms that were almost intentionally vague, almost designed to obscure who was responsible for things like sick leave, that sort of thing. It wasn't just numbers, it was about human dignity.
Wow. Okay. And then there's distributed ledger technology, or DLT. This isn't just another tech trend, is it? It seems to be fundamentally reshaping how we think about trust and record keeping, right down to something as basic as land titles. What are the ethical challenges for accountants when they're dealing with something as foundational as, say, land registration or other sensitive citizen data on a DLT?
Yeah, DLT. It's a digital system that records asset transactions in multiple places simultaneously. Crucially, there's no central data store. All the participants share a common, updated view of the records. For example, the UK Land Registry expects to use DLT to basically revolutionize the whole land registration and property buy-sell process.
It's huge.
Absolutely. So the reliability of such a system is paramount, as is the need to ensure sensitive citizen data isn't put at risk. If something goes wrong with a system like this, which affects a huge proportion of the population, it could result in really significant economic consequences.
I can imagine.
So accountants need a solid knowledge of distributed ledgers. They need the ability to assess hacking risks, and they must be honest about their comfort level with this knowledge, especially when dealing with large volumes of sensitive public information. The public interest is absolutely paramount here. It's not just about verifying numbers anymore. It's about verifying the integrity of the entire system of record.
Okay, next up, big data and artificial intelligence. AI and big data promise these lightning-fast, highly accurate decisions. That sounds great on the surface, but where's the ethical friction point, especially if we consider the, black box nature of some of these technologies?
Right. While these technologies can certainly improve lives, they also pose profound ethical impacts and, frankly, disruptions to society. When we talk about artificial intelligence, we're really discussing systems designed to learn, reason, and make decisions sometimes in ways we can't fully trace. And big data. That's the analysis of these massive complex data sets to uncover patterns, often leading to insights that were just impossible to find before. It's in those patterns and that sometimes opaque decision-making where our ethical questions really start to bubble up. The accountant needs to review the governance and assurance around AI to build that stakeholder confidence in its appropriate use. AI should always be lawful, ethical, and robust. That's the goal.
So, if AI is making decisions, who's truly accountable when things go wrong? It seems like this technology, while incredibly powerful, fundamentally shifts the locus of ethical responsibility, doesn't it? What are the specific ethical questions AI forces us to ask?
Absolutely, it does shift things. Think of it like training a chef with a recipe book that only uses one type of spice. The AI might become incredibly efficient, but its taste for fairness will be inherently biased because of the ingredients it was fed the training data.
Right, biased data in, biased decisions out.
Exactly. So we need to consider the malicious use of AI, the significant risks of bias just creeping into the system in unexpected and potentially detrimental ways. AI's potential as a threat to entire categories of employment, that's a big one too. And fundamental questions of technical safety and potential failure. While the core ethical principles, integrity, objectivity, they remain highly relevant. Demonstrating compliance becomes much more difficult, especially if there's a lack of understanding around the contractual terms regarding how data is used. It's interesting, though. AI might remove some threats, like maybe intimidation, by automating tasks, but it could also complicate demonstrating compliance with those very principles if you can't actually explain how a decision was reached.
Right, the black box problem again. So, with all these new digital landscapes reshaping the profession, which of the fundamental ethical principles do you think are most at risk?
I'd say professional competence and due care are probably most likely to be compromised. These digital developments present new, often unseen problems that require rapid learning and expert judgment. It's really challenging to apply ethical judgment to digital technology without truly understanding it, both the opportunities and the challenges it presents. And it's important to remember, ethical responsibility applies even if you're just an observer to a situation. It's not diminished in any way. You can't just claim ignorance of a digital system if you're supposed to be overseeing it.
That makes total sense. Okay, so despite all these new technologies, the basic ethical considerations remain. But you mentioned there's a clear framework an accountant can use. Could you maybe walk us through how to address a digital ethical dilemma using that framework? Perhaps we could even apply a step or two back to that AI tax algorithm dilemma we started with.
Absolutely. Yeah, there's a pretty standard 6-step process for addressing an ethical issue. First, you have to determine the nature and the context of the decision or the dilemma. So, for our AI tax algorithm example, the nature is a systemic bias and the context is tax calculation, potentially impacting thousands of small businesses.
Okay, step 1.
Step 2, you identify whose rights and interests are affected by that decision. So clearly the small businesses, but also the accounting firm's reputation, maybe even the broader economy's fairness.
Right.
Third, you determine all the relevant professional rules, governance codes, and any applicable laws. You need to know the rule book.
Got it.
Fourth, you need to set out the arguments both for and against a particular course of action. What are the pros and cons? Fifth, you formulate a solution that tries to do justice to those arguments, considering all sides. And finally, step 6, you must take into account any negative consequences of either taking that action or, just as importantly, not taking action. It's really about systematically dissecting the problem, even when the technology behind it feels complex or opaque.
That sounds like a really solid practical framework. It seems like what we've seen today is that while the environment an accountant operates in is, yes, digitized and rapidly evolving, the fundamental ethical principles themselves remain pretty resilient. However, the application of these principles and the need for heightened awareness are absolutely crucial in this new landscape, especially where, like you said, a single algorithmic bias could have such sweeping consequences.
Precisely. Constant learning, critical thinking, and just a willingness to adapt are essential for navigating these new complexities. This is really how we maintain trust in this rapidly evolving digital world, ensuring accountants remain those trusted advisors, not just, number crunchers.
So here's a final thought for you, our listener. As digital innovation accelerates even faster, how will your understanding of ethical responsibility need to adapt? Especially for scenarios that maybe haven't even been conceived yet. What new threats or dilemmas might emerge from technologies just over the horizon, and how can we collectively prepare to uphold our ethical principles? Something to think about until our next deep dives.